because it's not usually discussed, but should be, that the foreigner also owns about $5 trillion worth of US corporate bonds. And then the big mama is the equity market. And everybody always talks about the buyer strike, the foreign buyer strike on US treasuries. But the foreign investor owns twice as many US equities as they own treasury securities. They own almost $20 trillion of US equities, which of course helps fund corporate America. So that's the net benefit. You see, you can always just focus on one side of the balance sheet and say we're a loser because we're running trade deficits, and that means these jobs in manufacturing are being created somewhere else. But the offsetting benefit is that the United States, by virtue of these capital inflows, consistently have a lower cost of capital that would otherwise be the case, both the debt and equity cost of capital, and a higher rate of return on assets. And that, therefore, creates the tremendous increase in wealth that the United States enjoys that's not comparable in any other country. Of course, it's a vicious circle because that wealth creation generates an impact on confidence in spending. And there is a 95% correlation between consumer spending and imports. And so that's why the United States has just about the lowest personal savings rate in the world. And at around 70%, it has just about the highest consumption to GDP ratio in the world. So how do you not run trade deficits with the rest of the world when their savings rates are higher, their consumption ratios are lower, the rest of the world lives more frugally, but the rest of the world also has much lower wealth accumulation? So there's a symbiotic relationship between the current account and the capital account. And my concern all along has been that the White House just focuses on the trade deficit without realizing that the trade deficits have coincided with years of accumulated capital inflow that has made America wealthier. I think the problem in the United States is how that wealth and that income has been distributed. It is not the fault of the foreign investor. It is not the fault of the foreign producer that to this day, whether you have Democrats in power or Republicans in power, these gaping wealth and income inequalities. All we've had is a situation where fiscal and regulatory policy has benefited the upper end of society in the United States. And that's why the lower end has continued to lag to this very day, which creates its own societal problem. So you can point the finger at America's economic problems and blame it on the rest of the world. But the problem to this day, and included in this big, beautiful bill, does not address, I think, what remains one of the fundamental constraints on the US economy and on its society, which are these virtually unprecedented income and wealth inequalities. That's really the issue here.